If you've got a bank account in the UK, you need to pay attention right now. Because from this year, the Department for Work and Pensions, HMRC, and even your local council have been given sweeping new powers to look at your money. And I'm not talking about a quick glance at your balance. I'm talking about the government being able to check your accounts, share your data across departments, and in some cases, even take money directly out of your bank account without your permission. If you claim benefits, if you're on a pension, or even if you simply share a joint account with someone who does, these new rules could affect you. Now, before you panic, let me be clear. The government says this is all about cracking down on fraud and saving taxpayers billions of pounds. And nobody wants to see the system abused. But here's the thing that has campaigners like Age UK and Disability Rights UK deeply worried. They're calling this suspicionless algorithmic surveillance, and they're warning it could lead to a Horizon-style scandal where innocent people are wrongly targeted. That's serious. The DWP is rolling out what they call Eligibility Verification Notices, or EVNs, starting with a test phase. They're going to be looking at accounts that receive universal credit, pension credit, and employment and support allowance. But here's the catch that most people don't know about. If you have a joint account with someone who claims benefits, your details could be swept up in this too. So even if you've never claimed a penny from the DWP in your life, the government could still be looking at your finances. Before we dive into exactly what these new powers mean for you and your household, make sure you hit that like button. It really helps the channel, and it means you won't miss any of the other important updates we've got coming. Now, let's get into it, because if you have a bank account in the UK, this is one of the most important videos you'll watch this year. So, what is actually happening here? The government has passed new legislation that gives the DWP unprecedented access to the financial data of benefit claimants. This is all part of the Public Authorities Fraud, Error and Recovery Bill, which the government says will save the taxpayer £1.5 billion over the next 5 years. The DWP is now able to issue what's called an Eligibility Verification Notice, or EVN, to banks and other financial institutions. When they issue this notice, the bank is legally obliged to look at the accounts that receive certain benefits and flag anything that seems to breach the rules. The DWP isn't getting direct access to your bank account. They're asking the bank to do the checking and only report back if they find something that doesn't add up. For now, this only applies to universal credit, pension credit, and employment and support allowance. The state pension is currently excluded. But the government has been clear that this is just the beginning, and the list of benefits being checked could be expanded in the future. Now, you might be wondering what exactly the banks are being asked to look for. The main thing is the savings limit for universal credit. If you're claiming universal credit, the rules are very clear. You cannot have more than £16,000 in savings and still be eligible for the benefit. Now, if you live with a partner, the DWP takes your combined savings into account, even if only one of you is claiming the benefit. So, if you're in a couple and you have a joint savings account, you need to be very careful. If your total savings exceed £16,000, you could lose your universal credit entitlement. And the DWP is now able to ask banks to flag accounts where the balance exceeds that threshold. This is the main target of the new checks, and it's why the DWP has been sending out warnings to claimants to make sure they're reporting their savings correctly. But savings aren't the only thing they're looking at. The banks could also be asked to check for evidence that a claimant has spent more time abroad than the benefit rules allow. There are strict rules about how long you can be outside the UK and still claim certain benefits. And the DWP now has the power to ask banks to flag accounts that show regular spending or transactions in other countries. This is part of the wider crackdown on fraud and error, and it's designed to catch people who are claiming benefits they're not entitled to while living overseas. But there are strict limits on what the banks can share. Under the new Code of Practice, banks are prohibited from sharing your transaction history or telling the DWP what you actually spend your money on. So they can't see if you bought a new TV or went out for dinner. The DWP will only get limited information, such as your account details, your name and date of birth, and confirmation of whether your account met a specific eligibility indicator. They will not get a breakdown of your spending. Now, there's a really important point here that a lot of people miss. If you have a joint account with someone who claims benefits, your information could be shared with the DWP, even if you've never claimed a penny from them. This is because the bank may not know which person on the account is the actual claimant, so they share details about everyone on the account. And for some benefits like universal credit, the DWP takes into account the capital held by everyone in the same household. So, if you're living with someone who claims universal credit and you have savings or investments, the DWP could technically be checking those too. This is one of the most controversial aspects of the new rules, and it's why campaign groups like Privacy International have raised serious concerns about the government prying into the finances of people who have no direct connection to the benefits system. As one expert put it, this is not a trawl of everyone's finances. But if you share a joint account, you could still be caught in the net. And what about HMRC? Well, they're getting in on the action too. The DWP and HMRC are now sharing data more closely than ever before. There's a new system called the Customer Insight Platform that is being used to share bank account verification data between the two departments. This is designed to improve the ability to detect and prevent fraud across government. HMRC can already use third-party data, including bank and building society information, to calculate your tax and to check if you're paying the right amount. Now, with this new data sharing agreement, they're able to get even more information from the DWP about benefit claimants and vice versa. The government is essentially building a massive database of financial information that can be shared across departments, and the new bank account checking powers are just one piece of that puzzle. But what happens if the DWP thinks you've broken the rules? This is where it gets even more serious. If the bank flags your account and the DWP finds a discrepancy, they can then contact the bank to request statements or information about any other accounts you might hold. And from October 2026, the DWP has the power to directly seize cash from your bank account. They can issue what's called a direct deduction order to your bank, which forces them to take money out of your account to repay a debt to the DWP. This is a massive escalation of their powers. Previously, they would have to go through a court to get a deduction order, but now they can do it directly. The DWP says they'll only use this power as a last resort, and they'll make sure it doesn't cause financial hardship, but it's still a very serious new power. Now, you might be thinking, well, I've got nothing to hide, so this doesn't affect me. And to be fair, if you're claiming benefits correctly and you're reporting all your savings and income, you probably don't have anything to worry about. The DWP has stressed that they're not trying to catch out honest claimants, they're trying to catch fraudsters. But the problem is that the system isn't perfect. Experts have warned that automated checks and AI-driven risk analysis could create false positives, where legitimate claimants are wrongly flagged for investigation. This is what happened with the Post Office Horizon scandal, where innocent people were wrongly accused of fraud because of a computer system that didn't work properly. Campaign groups are worried that the new DWP checks could lead to the same kind of disaster, with vulnerable pensioners and disabled people being subjected to stressful investigations and having their benefits stopped for no good reason. So, what should you do if you're a benefit claimant? The advice from the DWP is simple. Make sure your details are up to date. If your savings, investments, or circumstances have changed, you need to report them to the DWP as soon as possible. This could prevent overpayments and stressful clawbacks later on. The DWP argues that their goal is fairness, not punishment. They say that the new checks will help ensure that people are paid accurately and that errors are found and resolved sooner. But the reality is that the system is becoming more complex and more intrusive, and if you don't know the rules, you could easily make a mistake that could cost you dearly. The new bank account checking powers represent a fundamental shift in the relationship between the government and its citizens. The government is now able to look into your finances in a way that was previously unthinkable. And while the stated goal of reducing fraud is a worthy one, there are genuine concerns about privacy, fairness, and the potential for mistakes. The government says that any signals of potential fraud will always be looked at comprehensively by a member of staff. But that doesn't guarantee that innocent people won't be caught up in the system. The safeguards include independent oversight, a code of practice, and penalties for banks that overshare information. But whether these safeguards will be enough to prevent a scandal remains to be seen. One of the key pieces of advice from financial experts is to check your bank statements regularly and make sure you're not holding more than £16,000 in savings if you're claiming universal credit. This is the big one. This is what the DWP is most focused on. If you have more than £16,000, you need to report it immediately. If you don't, you could face a fraud investigation and you could be forced to repay any overpayments. And remember, this applies to couples too. If you and your partner have savings, they will be added together to determine your eligibility. So even if you have your savings in a separate account, if you're living with someone who claims universal credit, the DWP could take those savings into account. Another thing to consider is the implication for joint accounts. If you share a bank account with someone who claims benefits, you need to be aware that your financial information could be shared with the DWP. This is a tricky situation because you might not want the government prying into your finances, but you also don't want to stop your partner from claiming the benefits they're entitled to. The best advice is to talk to your partner and make sure you both understand the rules. If you're worried about your privacy, you might want to consider opening a separate personal account for your own money so it's not linked to the benefit claim. This isn't a guarantee that you'll be exempt from checks, but it could reduce the amount of information that the DWP can access. And finally, if you receive a letter from the DWP asking for information, don't ignore it. You need to respond promptly and provide all the information they request. If you ignore the letter, you could face penalties, and the DWP could even stop your benefits. If you're unsure about what to do, seek advice from a benefits advisor or a charity like Age UK. They can help you understand your rights and obligations, and they can help you fill in any forms or provide any information that the DWP needs. The new bank account checking powers are a reality now, and they're going to affect millions of people across the UK. The DWP is entering a test and learn phase to make sure the system works properly, but the full rollout is already underway. The government says it's about fairness and saving taxpayers' money, but for many people, it feels like an intrusion into their private lives. The truth is, the rules have changed, and if you don't know what they are, you could be the one who pays the price. If you've already checked your savings, or you're thinking about how these new rules might affect you, drop a comment below and let me know what you think. I read every single comment, and I'm here to help. We're a community here, and we look out for each other, so check your bank balances, check your eligibility, and make sure you know your rights. And as always, take care of yourselves and each other. I'll see you in the next one.